I've been trading for 6 years now, and if I'm being honest, most of these years were very painful. I've made every mistake you can possibly think of. Day trading terrible time frames, copying YouTube strategies, revenge trading, over leveraging, thinking every move was manipulation. So I want to compress 6 years of my real market experience into the next few minutes, not surface level advice, but actual lessons that would have saved me years of suffering and thousands of dollars in the markets. So jumping right into this, when I started, I did what everyone else does. I jumped straight into day trading, 1 minute chart, 5 minute chart, chasing every candle like it meant something here. Why? Because I thought more trades equals more opportunity, which would equal more money. But the truth I learned the hard way was day trading this is 80% noise. This is not a skill, not a strategy. This is just noise on the 1 minute. Now, I'm sure that there are traders that are going to come for me for saying that, but personally, as a newer trader, this is nowhere to be starting your trading journey. There is too much going on. You're just dropped into a jungle of price action without understanding what it actually means. And coming from a swing trader that is basically only using market structure and macro bias, all I see here is back-end liquidity grabs, algorithm sweeps, fake breakouts, random volatility, all inside a trend that I wasn't even aware of because I never would have zoomed out. If your day trading feels inconsistent to you, it's not because you're a bad trader, it's because you're just trying to predict this randomness. And to counter this, I want you guys to stick to the daily time frame, the 4 hour, the 1 hour, and only taking your entries on around the 15-minute time frame to the 30-minute time frame. Find your direction first. Then you can lower the time frames into execution windows, not prediction windows. You can't build consistency inside chaos. If I hop onto the 1 hour, I can clearly see that we're in an uptrend. If I hop down to the 15-minute, it is not that hard to frame an entry around this area to continue to the upside. The second thing that I want to talk about is that you can learn from others, but you have to build your own edge. There's nothing wrong with learning other people's concepts. You should study different models. You should learn from other traders who see the market differently from you. And this is the mistake that almost every trader makes. Understanding someone else's strategy is not the same as having your own. I've spent years copying people's rules, entries, confirmations, risk models, but I never stopped and asked myself, do I understand why this works? Do I interpret structure the same way? Does this fit into my trading psychology? Does it fit in how I see the market? Can I actually execute this consistently? And the truth here is you cannot build longevity based on someone else's understanding of the market. Strategies do not make you profitable. Your interpretation of the market does. Take concepts from other traders, absolutely, but your edge must be built from your understanding of structure, your way of reading macro awareness, your time availability, your risk tolerance, and your emotional strengths and weaknesses. You can learn broadly in this market, build it very narrowly. Your edge is something you can create, not something that you can copy. I spent so much time trying to understand a simple pattern on the charts because that is all I was ever taught. And it's not a bad thing because yes, there are some pattern traders out there that are finding success, but to me, I have no understanding of how patterns work. And in a $1 trillion market, I can't just draw a line like this, look for a simple pattern of sorts and take an entry off that because there is no why, there is no reasoning and understanding to me that actually supports this. For me, I lack such a deep understanding of the markets, of why they're moving, that I have such a different understanding from another trader that might just draw some lines on a screen and doesn't care about the context behind a move like this. Now, liquidity traders might get really excited in this case because you have triple highs right here, an Asia high, and then an overbearing high right to the left. So now they're going to be looking for an entry model inside this area and to the highs. You know what? You can trade like that, but to me, what's stopping the market from absolutely tanking to the downside? Absolutely nothing. That's why for me personally, macro bias is the strongest way of doing this because it fits my interpretation of the markets. It gives me an understanding and gives me the confidence to take a trade like this. If my macro bias was bullish and I did see all of these highs lining up for me to take a position, would I be more confident? Yes, because now I have the why behind the what. And this brings me into my next point. Ignoring macro is basically just trading blind. I've talked about this so many times before, and this one has cost me the most amount of money. I used to trade without knowing any macro. CPI, didn't know. FOMC, I just didn't even trade the markets that day. Rate decisions, oh my God, I didn't even check. Tariffs, don't even know what those are. I had to go look it up in the dictionary and didn't even know how those move the markets. Every time I got wiped out and a stop loss got obliterated, I always said, you know what, that's manipulation. That's the market moving against me. But no, it's not manipulation. It was macro. Basically trading the effect of something without understanding the cause. So when you check the economic calendar before you trade, you understand the catalyst and the impact that it has on the markets. If the price is about to move because of news, that's not a setup, that's a reaction. Literally, it takes 5 minutes to hop over to Forex Factory, check the calendar, and understand what is going on in the markets. It takes another 5 minutes to say, how is this going to affect the markets? If we check in on PPI, How did this come in? What was the forecast looking like? How did it actually come in at? What was the previous CPI values from before? How does this affect the markets? Well, you know what? Now I have a better understanding of why the market could move in a direction. Hop back over to the charts, and now I see why the market is moving in the direction that it's moving in. Now you know the catalyst. The structure plus macro equals so much more clarity. Structure without macro is just confusion. Now, the biggest thing for a trader, and probably the number one killer of gains, is emotional trading. And trust me, I used to be the most emotional trader on the planet. I would revenge trade, oversize, add to losers, close winners early. I'd hold losers way too long, and I would just be trading out of boredom. And the truth that you don't want to hear about this is your emotions do not care about your strategy. They care about avoiding pain. And a pain in trading is basically just taking a loss. So your brain does everything possible to avoid the feeling of pain. You skip steps, oversize positions, chase entries, exit early, you re-enter randomly. You don't fix emotional trading with discipline, you fix it with structure. You only trade your session. You have a daily max loss. You change your sizing, then you stick to consistent trade sizes. You only enter when structure and catalysts align, have rules that take emotion out of the execution. Systems beat emotions every time. Biggest factor for me that changed everything was having a literal checklist that I physically used to check off boxes like this before entering a trade. Thankfully, I'm at the position now where I don't need a physical checklist. I have grown emotionally through my trading skills, and now I understand when is a good idea to be trading and when is a bad time to be trading. I'm at the point in my trading now, and I think every profitable trader will agree with me on this, where I don't even want to trade. The market needs to show me the most A-plus setup I've ever seen in my life for me to even get involved. Because for me, if the system does not fit my plan 100%, I do not care to take the trade. I would much rather sit on my hands until an A-plus setup presents itself. With this mindset, I have 10x my profitability because I'm not chasing a move every single day. I'm sitting back and letting the moves come to me and only taking the most quality setups. I'm recording this on November 27th, and I've only taken 4 trades this month. That is basically 1 a week. I've had 3 winners and 1 loser. I'm up so much on the month, and I couldn't even care to take anything for the rest of the month now. Now, this brings me to my next point, which is trading when you shouldn't. One of the biggest breakthroughs I had in my trading was realizing something very simple. Not trading is a position in itself. Some days the market is not going to give you clean structure. Like today is a bank holiday. What kind of structure am I looking at over here? Some days there are no trends. Some days there is no liquidity or volume. Some days volume is trash. Some days you're tired, confused, unfocused, emotional, or just mentally off. But I used to take trades anyway because I felt like I needed to. You don't get paid for activity, you get paid for accuracy in this game. So for all those traders that are just starting and just getting into their trading careers, I urge you, if there is anything telling you that you should not trade that day, go with that gut feeling, because yes, maybe you do miss a move, but you continue to keep your emotional clarity. You have an emotional battery that needs to be charged every single week. I take weekends off completely where I don't even look at the charts until Sunday night. I check in on my stock positions, I do some reading, but there is no active trading to be done or anything for me to even look at the markets besides a weekly review on a late Friday night. Further to that, my weekends are completely here for me to decompress, step away from the charts, have some good quality time to myself, and just recharge for the next week ahead. You guys would not believe that even the smallest thing can set you off and set your trading on a doomed path from the start as soon as you log on to your trading view. And this leads me into my next point, which is bad risk management. This one can destroy you for years. 3% risk on a trade, sometimes 5%. There's no daily stop, correlated trades, scaling into losers. Letting one bad trade erase a week's worth of wins is probably the worst feeling a trader can ever feel in their journey. I wasn't inconsistent because of my strategy. I was actually inconsistent because my risk was inconsistent. And the fastest way to become profitable with this, and the easiest fix to this, is risking a consistent amount over all of your trades. Whatever that is, 0.5%, 0.3%, 0.7%, 1%, 2% risk per trade. Keep that risk value consistent, because then you'll actually understand how to be consistent as a trader overall, and you're never going to over risk on another trade again. It doesn't matter how big your stop loss is. You can still create a trade that has a $500 stop that's this big, a $500 stop that is this big, and a $500 stop that is this big. That's the benefit of trading. You can just size up and down as you would need. Keep that risk consistent, and I promise you'll become a more consistent trader. Another great tip is planning your stop before you enter. Never just take a position out of the blue with not understanding where your stop's going to be. You also want to size based on your structure and keeping your risk the same no matter how you feel. I don't care if you are so confident in a trade. I don't care if you're scared of the trade. Your risk should be consistent for every single position you take in the markets. Consistency is built from risk, not your entries. Now, we're all familiar with TradingView's indicators, metrics, strategies, whatever you want to see on the chart, you can put there. I used to have 10 indicators and around 50 lines on my chart. Trend lines everywhere, supply and demand zones everywhere, support and resistance stacked like a game of Jenga. And this just created confusion, not clarity. Real traders simplify their charts, high time frame trend, key levels, catalyst, execution window. I've gotten so many comments talking about how basic my charts are because they are very basic. There is not much to it. I have one indicator that marks out sessions, previous day opens, previous day highs, previous day lows, and that is the only indicator that I use. Other than that, it's me just drawing some boxes, marking out my swing highs, my swing lows, and that's really it. That's how I plan my entries. Clarity comes from removing things, not adding them. If your chart looks like a crime scene investigation, you need to simplify it. Everything honestly shifted for me when I realized all of these things. Shifting to a higher time frame, price finally made sense. I studied macro more seriously because you can't trade candles without understanding catalysts. I narrowed down to one setup because mastery beats variety. I built my edge from concepts I understood deeply, not copying and pasting someone else's. I stopped forcing trades when I realized quality over quantity, and I treated trading like a performance job. Sleep, focus, routine, consistency. So that's 6 years of trading lessons compressed into one video. If you take anything away from this, let it be this. You don't get better by copying strategies. You get better by learning how you understand the market. Because once you build an edge that matches your psychology, your routine, your bias, your understanding of structure, and your feel for macro, you finally stop fighting the market and you start trading in alignment with it. That's when everything changes. If you found value in this video, make sure to leave a thumbs up, subscribe, leave me a comment of anything that you want to ask, or just to start a discussion in the comment section. I love hearing from you guys and I appreciate all the support on the last videos. And with that, we'll see you in the next one.